Today I'll be talking about tax consequence of what happened when you receive rental income in United Kingdom. However, before we start, I'd like to introduce myself. My name is Ola Sulaiman. I have I'm your tax girl, and we've been doing this program. I think it's the fourth or the fifth week now. I'm a certified chartered accountant and also a tax advisor. I work with small businesses within my local place and outside as well, just making sure that they do the right thing and pay less tax and submit their returns on time. Now, the main reason I love tax a lot is either you're doing the right thing and paying less tax, or you're doing the wrong thing and you're paying penalties for doing the wrong thing. So usually people will do the right thing if they know what the right thing is. And most of the time, because we're busy and we have a busy lifestyle, we can't be bothered about the right thing. We get the letter and we'll be like, oh, I can't be bothered with this letter or whatsoever. So because of that, I am very passionate about talking about tax, helping people to do the right thing so that as to save money. I've been doing this through my business for the past 6 years or more, and I've been working with individuals. I've seen different cases. I've talked to different people. I know about different stories, and usually people will do the right thing if they know the right thing, because most of the time I hear, oh, well, I've done the right thing if I knew about it, or if someone has told me what to do, but I didn't know about it. However, not knowing about it is not an excuse with HMRC. So because of that, you have to know about it. So that's why I do this. And for the past since 2017, I've started recording videos talking about tax, advising people, creating a bit of awareness. So if you'd like to watch any of my videos, I think I've got about 40 plus now on the YouTube channel. You can go to Ronzo's Accountants and subscribe, so that every time there's a new video, you can watch as well and learn more. Now, I usually say this every time I do this program or any other video recording. This is a general tax advice. Every individual in UK has got different situation. So if any of this sounds familiar to you, I always advise get professional help. Don't say, Ola, I've said this, that is why I'm doing that. I know we like to do DIY most of the time. However, my genuine, sincere advice is get help, rather than trying to make a mess of it more. So, however, on this long show, I always try to talk about myself the past 1 week, so as to make you relax a bit before we go into the main tax talk. So, the past 1 week has actually been good, very busy, interesting one. I don't even know, when I was writing this, I was like, which one of them should I go for? So I started from Saturday taking some very beautiful children to Whipsnade Zoo, and it was very fantastic. It's actually my second time visiting there, and it was good. It was definitely very good. Seeing those animals were very, very fantastic feeling. I had fantastic feeling. So, however, my swimming class this week has been great. If you're just hearing about my swimming class, the last 1 month I started learning how to swim, so I had to take a challenge to raise money for the food bank and my foundation that I set up in January to help children in primary school, provide food and pay for their school fees, uniforms, libraries, etc. So this year my challenge is to do an hackathon, which is running 5K and swimming 400 meters. And for somebody that does not know how to swim, my instructor will be like, wow, that's a lot of work you're going to be doing. So because of that, so my swimming class on Tuesday, one of the classes, the swimming instructor taught us how to swim on the back, and literally I could not even move my leg. I was just drowning in water. So what she did this week was she gave us flippers that we wore, and all of a sudden I was just flying on the back and coming back and swimming so fast. And it was so good, as in I was just like, oh God. So by the time I took off the flippers, I was able to manage to swim on my back properly as well, which is fantastic. However, I got my prescription swimming goggle for the first time, and it was so cool. I can't even tell you how cool it is. If you don't have one and you swim, you should get one. I could actually see the water, as in I could see people's leg when I was swimming. And usually when you're swimming and you can't see, it's like you're swimming blindly. You're just literally just swimming without even knowing where you're going or seeing properly. So that was very, very, very good. Very, very good feeling. So yesterday, what happened yesterday? Yeah, we went out to Drayton Manor, and somebody that is smiling at me now kept saying, how can you go to such a place without taking going on the ride? However, I woke up in the morning and I read a post on Instagram that said, when was the last time you did something that was scary? And I was just like, oh, that's true. So when she started saying, you should go on the ride, you should go on the ride. So I told the children, I will go on the ride with you. And I went on this ride. Oh my God, I almost died. I keep saying that because I can't even explain how it felt. I was just screaming. I was just thinking we just take you up all of a sudden and bring you down. I was just like, oh my God, I'm dead. Oh my God. But I'm never trying that again for a long time. Nobody's going to convince me to do that again. It was nice because the children said, oh, Mommy, we're proud of you that you done that. However, it was very, I can't explain the feeling. It was like I was about to vomit. Ooh, oh God, no. So I'm sticking on to Aussie. I like Aussie. You know the Aus one when we go to the park. That one is fine. Or trail ride like somebody went on yesterday, where you just sit down, relax and enjoy. So that's just me for the past 1 week. And now it's time to talk about tax. Yes, the most interesting part of the talk. I know. Just believe me, yes, it is. Anyway, I know it sounds very obvious that everybody that receives rental income would pay tax or declare it to HMRC. However, there are two sets of people. Some that actually know they should be doing it, and some that cannot be bothered, like I said last week. However, the real fact is, if you're receiving rental income, you should be doing something about it. Except if you fall in any of the categories I'll be talking about on this live show. So now, any individual in UK, and if you're joining me for the very first time, what I do at times is I look into my book because I've written a bit of that I would like to talk about, and I usually don't want to forget any, so I keep looking into the book just to make sure that I'm following the road, because I know how to just so fast to manage my time very well, basically. So an individual in UK that receives would receive rental income if they are receiving money from rental income in UK. Now, a common misconception is like, if you are abroad and you have a house here, you don't have to pay tax on it. Now, what they've done recently is, what you can do is you can arrange with your letting agent, and what they'll do is they'll pay you net of the amount that you're receiving. So by doing that, you're still declaring the rental income to HMRC. However, you still have to declare that rental income. So now the most common one is receiving from properties, like I said. However, there's some other income that you can receive that are rental income, like receiving income from use of a land or use of a fish pond or something. So however, I'm going to say what HMRC say exactly. That anybody that is carrying on this business is carrying on a rental business, and they should be declaring this to them. Now, if you have or you own an interest in a land or a property in UK, and then you enter into several transactions that will make you to get money from this particular property. Now, two things I can deduce from this, their definition. And this is the first one I'll say now. That's one of the most common mistakes that people make, which is when you own a property or you own an interest in a property, what I've seen so far is some probably husband or wife, they will have a property together, and then the husband will go on and declare the rental income afterward, declaring to HMRC. Now, the wife would not do anything because the husband is declaring, one of us is declaring, that's what that matters. However, or a father and a son, or two friends, and you say one of us is declaring it, HMRC knows about it, that's all that matters. However, they're doing something that is wrong. As long as an individual in UK has an interest in the land or property, and then that land or property, somebody is collecting rent on it, whether you spend out of that money or not, as long as you own part of that part of that property, you need to declare that income yourself personally. Now I'll tell you the reason why. Scenario one. So let's say husband and wife. Husband is receiving 60,000 in a year. The reason why I say 60,000 is because most likely they're going to pay tax at 40%. And now the wife works half part-time. And therefore, because the wife is working part-time, is paying 20% tax. Now, if I were you, who would you want to declare the tax? The wife. Because if the husband is declaring the tax, that means the husband is going to be paying rental income at 40%. So HMRC knows about this as well. So even though some people do it innocently without even thinking about what I've just thought about now in my tax head, however, it's still wrong. As soon as you have an interest in a property, your dad has added your name to the property and is receiving rental income, you as a taxpayer have to declare your share of the income to HMRC. And simply what that means is, let's say your profit from the rental income is £10,000. You would declare 5,000, the other person would declare 5,000, and you both pay tax at the same rate that you're supposed to pay. It doesn't even matter if you're supposed to be paying tax at 20% or not. I think it's obvious, but it's a mistake most people do. People that actually even still doing the right thing, declaring this rental income. Hi Georgia and Major Aderunke. Hello. So I'll continue. So that's one of the most common mistakes, making one person to declare rather than all of you declaring the income. And this could happen in partnership as well. So all of you have to declare your part of the income, except if that rental income is coming through a limited company, and then the limited company is paying tax on that rental property, and then all of you then need to then declare your dividend or whatever you've collected from the limited company personally. So because of that, you need to make sure that you're doing the right thing. Now, and the second one obviously is it doesn't matter if it is a rental property, as long as it is a land or you've gone into some transactions. You know, there are so many stories we hear out there now that at the end of the day, the main purpose of you going to that transaction is to receive rental income. Then you should be declaring that. Those that know what I'm saying know what I'm saying. So anyway, I'll just continue. So I've said that. Okay, so I'll go to the next one. So then, when should you inform HMRC about this rental income? Now, the ideal thing is to tell them by the 5th of October after the tax year that's ended. So, let's say in this tax year 1920 now, you're supposed to tell them by 5th of October 2020. That's a long time too. However, there are some people that have not done this because they didn't know they should be doing it, or they can't be bothered to do it. I know this is the second week I'm talking about this, and I don't know, how would I put it now? When HMRC opens a window, it means it's just for a certain short time. And when people don't take advantage of that window, it worries me a lot. Because as soon as that window is closed, or you can't do anything about it again, then it's going to be costing you money. And that money, I know when we lose money physically, like the other day that I dropped £20, it's come out now, I dropped money on the floor. I actually felt very bad because I was like, how can you drop money on the floor? And somebody's picked up the money, but somebody's told me like, okay, maybe it's somebody that is homeless or really needs the money. But however, if somebody's just having lunch on my account just because I was careless and I've dropped the money on the floor. And that's how we should see tax. When you're paying something that you shouldn't be paying, that other people are not paying that particular amount, you should be worried that you're losing money. And that's how I see tax for me. I don't mind us paying the right tax. I'm actually against people that do not want to pay tax. It is wrong because the system has to be fair. However, when some people are not paying something and then you are paying it, then it's wrong. So coming back to what I was saying before then, if you've been receiving rental income before now and then you want to do something about it because Ola have said something, there's a window out now that says property-led campaign. Now, like I said, there's a window, they'll shut at some points. However, if you go to them, like I've done this for several years, up to 20 years, you'd pay penalty of 10% on whatever tax you should have paid for those 20 years, let's say 20 years, and then it will add interest to it as well. However, if they come to you and say, we heard you've been getting rental income, so because of this, we want you to declare it. If you cooperate with them and you do the right thing, then they'll give you a penalty of 20% within the LED campaign. Then when the LED campaign window closes, is a 30% penalty. Now, when I say penalty, let's say you're supposed to pay £1,000 tax. Your penalty will be, if you've done the right thing, it will be £100. If you've not done the right thing, £200. If the window closes, £300. Please tell me, that's £200 difference. Imagine you going to the shop and spending £200 on something, and usually it's not £200 in real life. In real life, it's thousands of pounds. So because of that, because it's a window, they're not going to judge you, and that's why I keep telling clients that come to me about this. They are giving you the opportunity to come and do the right thing. So if you're coming, the worst that would happen is they'll charge you the right amount, interest, and going on forward, you start doing the right thing. So that's just me roundly about doing the right thing, which I know we all don't do all the time. However, there are some certain people that don't have to pay rental income. They don't have to declare rental income. So these people are people that if your rental income that you've received all through the year is £1,000, then you don't need to do anything. So let's say you own interest in a property and all the rental income that has come to you is £1,000 in a tax year. You literally don't need to do anything. You can claim property allowance. So everything I've been saying so far does not affect you. However, £1,000, how likely is that? It's most likely, it's probably about 10% of us that will be receiving rental income in a whole year, and it's just £1,000 that is your rental income. So apart from that, if the amount you're receiving is very little, as a rental income you're receiving is very little, you can call hmrc, and what they'll do is they'll adjust your tax code so that you're paying your rental, they're deducting the tax. So I think there's a kind of arrangement you can make with that as well, so that you don't have to submit self-assessment, because usually with rental income, there's a certain amount you're collecting every year, there's a certain expenses. If you are one of those simple, straightforward, you know what your rental income is in a year, you can call and say, I'm receiving this amount, can you just adjust my tax code for it? And what would happen is, at the end of the year, you don't need to pay because you've paid all through the year. So that could be another option. Now, another set of people that don't have to do anything about rental income are the people that rent a room in their house. Now, when I say rent a room, it must be your only house and you must be living in the house. So let's say you're renting a room in the house. And when I was preparing for this today, I was like, actually this is very common, this thing. Airbnb is a very, very common thing that most people would rent a room for a stranger to come and sleep and then go, and then they've just collected a bit of money, but it's their own personal house, etc. That might not even qualify. However, that was the thought that came to my head, like this is. However, for people that have lodgers in their houses, people that have people that rent their house for a short time, thereabout, as long as it is in your house, you're living there, you're paying the electricity, gas, you are the one that can determine the rent they pay. You can decide to send them out of the house if you don't like them again, probably because they are cooking and their cooking is smelling, you know. They're cooking too many jollof rice. We cook jollof rice where I come from, sorry. So if the amount you've received in a year is not up to 7,500 in a year, you don't have to do anything. You can claim something that is called rent a room relief. So with that, you don't need to pay tax. On top of that, it's automatic. You just not do anything. But as soon as you go over, even if the person is in your house, then you don't need to pay tax. So those are the set of people that don't need to do anything about their rental income. So another mistake is someone having people in their house and then they're worrying like they're supposed to do something, or they're worrying maybe the HMR taxman is going to knock their door because they've got someone in their house. However, if you're renting a room in your house that you live in, 7,500, you're okay. However, if you have a partner, husband, wife, boyfriend, girlfriend, that you both live in the house, both of you, you'd have to divide the 7,500 into two. So therefore, don't say I'm renting the house for 15,000 to someone that is living in my house, and then my share will be 7,500, my boyfriend will be 7,500, and then we don't need to do anything about it. That is not what Allah has just said. Please, don't quote me on that. So, however, if it's just you, or you can divide it between two of you and it's 7,500, you don't need to do anything about it. Now, the common, oh God, I've got 10 minutes. I know this was going to happen. Another mistake that happens again is how to calculate the tax, your rental income. So now we've established that if you're receiving rental income, you do the right thing and you submit your self-assessment, or you tell the HMRC about it. Now, the next thing then you need to find out about is how much tax are you going to be paying? Because at the end of the day, we don't want to pay too much tax. However, the mistake that happens here is either you're paying too much or you're paying too little. You're not paying enough because you're claiming things you're not supposed to be claiming. So your tax, like I tell anybody that comes to me and moan about the tax they're paying, is based on two things: the income you've received and the expenses you're claiming. So if A is collecting the same income as you and then claiming expenses that they shouldn't be claiming, obviously you won't pay the same tax. However, the only thing is one day somebody's going to say, we want to see your receipt, we want to see your record, and you will be able to provide your proper records why they won't be. So it's still part of doing right thing or wrong thing, but that's left to you, is your judgment. So back to what I'm saying. So now the expenses. Now the mistake here at times is landlords, they actually claim expenses they shouldn't be claiming, while some of us don't claim the expenses we should be claiming. So I'll quickly go through the expenses. Now with expenses, the main rule, and this is the guideline for most businesses anyway, any expense you're going to claim, it has to be wholly and exclusive for the business that you're doing. I'll say that again. Wholly as in W-H-O-L-L-Y. I know I've got accent, sorry. And exclusive for the business that you're doing. That means the reason why you're spending that money is because of that property, not because you're going to you'd use it later on or something. It must be totally for that reason entirely. And the second one is whatever you're trying to deduct must not have a capital nature. It must not be something that will last you more than 2 years. That's the guideline they've given us. It must, if it is between 1 and 2 years, you'll be a judge of that, like said, will this be capital or not? However, if it's more than 2 years, it's most likely going to be capital revenue, capital expenditure. So two things: whatever you're paying for must be 100% for the business. And number two, if it's not 100% for the business, then if it's 100% for the business, it must not be capital nature. Now, at times when we say capital nature, people think it's things that you buy physically. At times, services you pay that relate to a capital item is not allowed. Okay? Now, what was I going to say? Okay, I'll go to the next one. So now the most common, oh God, I've got 5 minutes. Oh my God. All right. Now, the most common one is general maintenance and repairs. Now, and this is a very common mistake that landlords make when they try to claim expenses for doing things in their house that is not revenue. Revenue means something that you do all the time. So I wrote it down somewhere, and I said, when you repair an item, you're trying to bring them back into the state they were before. You're not trying to improve the way they work. For example, if you have a kitchen that is wooden, you've just adjusted the kitchen to maybe the hook has fallen off, or you need to replace the door exactly. So whatever you're replacing is doing the same function as the other one. The only exemption to that is windows. when you change your windows from the non-efficient, what I forgot what it's called now, PVC, and you get the new electric, the one that is green. Oh, please forgive me. That one is exempted. However, any other thing that you get that is going to improve the value of the building. For example, if you go and check a building now and the kitchen, you want to rent it out and the kitchen is looking somehow, you quickly calculate in your head like, why am I paying this much rent? However, if the landlord then imputes a very nice posh kitchen and then they say it's £1,000, you wouldn't mind to pay the £1,000. That's what I'm trying to say. So anything that you do that is going to make the place look nicer, extremely, and even the nicer is you'll be able to use it for more than 2 years. You should be very careful of that. That's the most common mistake. Or you're replacing things, then it's a capital nature. Now the good news about that is you can then add whatever you spent on that on the value of your house, so that by the time you're selling the house, you'll be able to gain relief from your capital gain tax, because when you sell the house, on the long run you still pay tax no matter what happens. That's for another day. However, since I have 5 minutes, I'll talk about some other expenses that you can claim as well. You can claim the council tax, insurance, cost of services, like getting a gardener or whatever, letting agent, accountant fees. Now, mortgage expenses. I don't know how to do this in 4 minutes, but let's start. Now, mortgage expenses, this is the most, that's the change that it brought into place in the past. It started 2016. I'll tell you my school of thought in a minute now. Now, mortgage expenses in the olden days, landlord could deduct the whole amount. But I think what's happened so far, now this is my school of thought, okay? Don't judge me. Because individuals, landlords could then go and remortgage their properties and get more money and then rent another place, get another rental property out, and then their mortgage interest has gone up. And then what happens is, remember what I said, that whatever tax you're paying is your income minus your expenses. All of a sudden their expenses has gone up because their mortgage has gone up. So because of that, I think that might be one of those reasons. Anyway, whatever their reason is, in 2016-17, they changed the rule. And the rule is, on the long run, landlords will not be able to deduct mortgage expenses from their as an expense. And this is going to shake the whole system. And the landlords actually know about this already. Anyway, most landlords know. You don't make assumption in tax. Not everybody knows everything. But most landlords at this point know. So what they're planning is in 17-18, rather than deducting the whole amount, so let's say your mortgage expense is £1,000, you deduct 75%, 750. That's for 17-18. In 18-19 that we have now, rather than deducting the whole 1,000, you deduct £500. In 19-20 we have now, rather than deducting £1,000, you deduct £250. So that by 2020, 2021, I hope I've not missed that calculation, you don't deduct anything again. So gradually by 25%, landlords will not be able to deduct mortgage expenses. Now, what some people did when that came out, like, oh, we're going to move our business, our rental properties into limited companies, because obviously limited companies, they just pay 20% tax. And this new rule has not been introduced to limited company yet. And this is two things I will say to you. hmrc change rules and laws from time to time. I think that's why I love tax, because if it's the same every day, there's nothing to keep us active and reading all the time. So if they can change for individuals, it's possible they can change for limited company. However, that's just me. That's all as skepticism. Alright. However, the main thing is, if you want to do this, you have to make sure that you have enough money to be able to pay for stamp duties and capital gain tax. I know there's another way to go about it, but anyway, I don't have time to talk about that today. So because of that, on the long run, landlords will not be able to deduct their mortgage expenses. Because of this, I think that's why property-led campaign was opened, so that people would put their books right in order, and then from there, because that's a lot of tax that HMRs are going to be coming for people for. So this is the time to get used to it happening. Now, when you have a property that is fully furnished, you can actually claim something that is called wear and tear. Now, wear and tear is for the TV, the curtains, the cookery, anything they use in your house. However, it's 10% of your net income. Net income is whatever you've received after you've deducted all the expenses. However, you can't claim wear and tear allowance when you're already claiming the expenses to adjust, to repair these things already. Alright, I have to stop because it's 12:30. Oh my god. Now, like I said earlier on, how do you know the rate of tax that you pay? Now, the rate of tax depends on your personal situation at the moment. So whatever tax you're paying, so if your tax is 20%, and if your income is not up to 50%, most likely your rental tax will be 20% as well on your net income. Your income minus the expenses, okay? If you're 40% already, most likely you're going to be paying rental tax at 40%. If you are 45%, fantastic. You're giving HMRC half of your net income, which some people do. Anyway, so in conclusion, rather than not doing the right thing, like I always say, do the right thing. On the long run, it gives you peace of mind. I know it's easier said than done. It gives you peace of mind. You're not worried. And the thing that annoys me a lot in this my line of work is penalties. And when HMRC charges you penalties, except if you have a reason that is clean and you can fight that penalty, most likely you pay it. And that's money that you're putting down the drain. And that money could have been saved by doing the right thing. So thank you so much for joining me today. Someone said it was going to rain today, but I've not seen any rain yet. Although I'm hiding in the office though. Hopefully there will be rain tomorrow or Sunday. But have a fantastic week ahead. I hope you join me on Friday. I'll probably think about something to talk about personal tax next week to give a break from business owners. If this affects you or anybody you know, you can share this video, because what I'll do when I'm done now is I'll put it on the Facebook for a week, and then I'll download it and put it on the YouTube as well, so that anybody that wants to watch it after can watch, and it will also be on my Instagram as well all day. Thank you so much for joining me. I hope you enjoyed your lunch. It's Ola Sulaimon. At this point I usually start talking by myself, but I'll just keep quiet and just switch off.